Hi, I'm going to talk about lazy foreign tax returns that we see a lot of. Here's what I mean by that. Most foreign missionaries that we see tax returns prepared do a good job in calculating the foreign earned income exclusion, perhaps the clergy housing allowance to some degree, but we find that the Social Security tax is often neglected in taking all of the deductions that you're required to take, or even in understanding how the Social Security tax works when you're working in multiple countries. What we see a lot of is that some tax returns will completely exclude the missionary's income via the foreign earned income exclusion, but they take no consideration in trying to reduce the Social Security tax for that missionary. For example, I'm going to just pull a number out of the air. Let's say that a total compensation package for a missionary is $80,000. We will see that the foreign earned income exclusion completely eliminates federal income tax, and because of that, the missionary will pay the full Social Security tax on the $80,000. Which is a lot of money. That's $11,300 or so. So what missionaries can do for tax planning for Social Security is really two things that are very valuable. One is a 403B plan. I think every foreign missionary should have a 403B retirement plan. The beauty of the 403B retirement plan is that it can allow your money to grow tax-free, and then if it's structured properly and set up properly, it can be withdrawn tax-free via the clergy housing allowance. So it is the ideal way for a foreign missionary to build up equity in a retirement plan. And the 403B plan is one of the ways that you can reduce Social Security tax. The other way is expense accounts. Many foreign missionaries pay their expenses directly out of their pocket. Maybe they're not fully reimbursed by the mission organization, and so as a result, out of that hypothetical $80,000 package, they may wind up paying a lot of the expenses themselves for conducting their foreign missionary work. If that's the case, those expenses need to be deducted on the tax return. It may not impact the income tax, but it can dramatically reduce the Social Security tax that you pay. So a lot of care needs to be taken with foreign missionaries and how your expense account is handled both individually and from the mission organization. And it can make a big difference on the Social Security tax. Now another issue with Social Security tax is which country do you pay the Social Security tax to? That can be a big problem. If you're employed by an American mission organization, then you're generally required to pay U.S. Social Security tax. But if you're on a long-term visa in another country, that foreign country may also require you to pay their version of their country's Social Security tax. So to avoid dual taxation, the United States has entered into U.S. tax treaties with a number of countries. They have a kind of a funny name for it. They call it totalization agreements. But the U.S. has totalization agreements with 24 countries, and that would include most of Western Europe, Canada, Australia, some of the South American countries. So there's a number of countries that have this, and it will help avoid you paying Social Security tax to two countries. Now, sometimes you get to choose which country you're going to be paying your Social Security tax to. One thing to keep in mind that a lot of foreign missionaries aren't aware of is that the U.S. Social Security will pay the payments, your retirement payments, anywhere you live in the world, with very few exceptions. So you could retire in a foreign country, and the United States will continue to make your Social Security payments to you wherever you live. There's a few exceptions, like there's some countries that like Iran, Cuba, a few countries like that. But generally, certainly in Europe and the other countries, you can live virtually anywhere you want and collect U.S. Social Security. So there's a lot of issues with Social Security that you really can't afford to overlook. Just because your income tax may be completely eliminated due to the foreign earned income exclusion, or maybe in combination with the clergy housing allowance, Social Security is a pretty big issue in calculating your tax return. So don't be one of those missionaries that's guilty of filing what I call a lazy tax return.